All right, traders, I am back again with another video, and in this video we're going to talk about the New Zealand dollar. Last week in our members webinar, we have a members session throughout the week, and we discussed the trade of the week, and the trade of the week was this New Zealand dollar CAD because it had one of the nicest setups that we see and a good probability for the market to move, rally to the upside based off of support and resistance levels, which we're going to look at here in a second. So in our member session, what we do is we have a webinar and we'll go over all the pairs. We'll go over every asset and we'll look at the assets and we'll talk about the trading opportunities for that week, if there are any trading opportunities, and the ones that there are we'll focus on. So we focused on some trading opportunities, and this happened to be the best of all of them to me. I posted some other videos out with some Kumo breakouts. Those weren't those weren't things that we really looked at as being some of the top opportunities. So some of the top opportunities to me are the pullback options, when the market pulls back and then shows signs of settling at support, which was looking at this. We traded this a little bit different than what I'm showing you here, but I'm going to show you exactly what you could have been looking at other than the things that we looked at. We looked at a little bit more because we take it a little bit deeper than the basic Ichimoku stuff, and we do a little bit more than just the basics here. So what I'm going to show you here is going to be just the basic Ichimoku, which you could still do profitable with and still do well if you're patient and understand the system. So guys, basically what we looked at was the price had a Kumo breakout, broke above the cloud. Nobody took this breakout for us because we don't take a lot of breakouts, because a lot of times the market, you get a Kumo breakout and then the market pulls back to equilibrium for a little bit and then takes back off. So whereas someone could have got in here, we could get in here safer with a support behind us also to back our trade up. So the trade went up to this area and then pulled back down here. Now I believe this signal was last week. This was the signal, and so we had an entry above this level right here, and then the market went higher for us, right? But then there was news the next day, and we always pay attention to news, and we try not to trade. We definitely don't want to trade during news sessions. If we're in trades, we try to tighten up our stop, or else we'll get out of the trade. All right, and we definitely won't get into a trade when there is news approaching. But anyway, this was what happened the day before the news, and then some traders took profit, but some stayed in. Some got spiked out right here because you put your stop loss smack dab on the on this level right here, which will spike you out. All right, so the market kind of came back for you, and then it gave you another opportunity, and then here's the opportunity now, because what we had was 3 inside out. We box this here in, and then we trade above this level. All right, and then you're into the trade. So looking at this, when we had this crossover, we already looked for the market to pull back because we're looking for this market to continue moving to the upside. So I'm going to show you the levels, the Ichimoku levels that we're looking for targets with this thing. All right, so our target is going to be right up here, this 0.92153 level. That's going to be our target. That's going to be, this is your NT level, your N level. Then moving forward, you have your V level and then your E level. So the market could shoot for one of those areas. That's where we would shoot for anyway. The market could move up to those areas. A lot of times you'll see this N level is exactly a 1-to-1 ratio. That's why this level is 1 right here. So we see the market go 1 equals 1, which means, see this leg here? If I take, I'm going to draw it right here. I'll draw a trend line. So from this bottom point to this high right there, let's move this to the middle. That's this leg right here, right? So finding my target, because we have the N pattern, first we had the V pattern. So we have an I wave, a V wave, then an N wave. And then we look for our target. So our target's going to be 1-to-1 from, we're saying that this leg is going to be the same size here. So if that's going to be the same size there, we should have a 1-to-1 ratio, right? So if we put that there and look where that is, move it down just a bit That's your 1-to-1 ratio right there. You're going to smack dab right on that level. So that's how you shoot for your first target. Really, your very first target is your NT level, because sometimes the market won't make it to the 1-to-1 level. All right, but this is your NT, your N level. Your N level is your most popular level, and then you got your E level, your V level, and your E level. All right, so we're shooting for this level. Now, we're not, doesn't mean we're going to get out of the trade at this level. At this level, we're going to watch to see what the price action tells us, and then we're going to get into the, then we'll get out of the trade depending on the price action. So if I get a candle like this, an indecision candle here, and it gets up to this area, I won't take my profit here. I'll put a stop loss below that candle and see if the market can continue to move higher for me. But when we talk about that N wave and looking for that N pattern, I'm going to show you what we're looking at here. So we go in here, so that's 1, 2, this way, 3, 4, 1, 2, 3, and then 4, which means 4 could be, let's say 4 gets here. You have an N wave. So the first wave is an I wave, a V wave, and then an N wave. All right, and the market loves to move in N waves. The market moves in N waves. We can show that throughout. And then the other waves are a P wave and a Y wave. And then other than that, those are the only waves we're concerned with. All right, so when the market's moving in this N wave, we're going to shoot for this target. Now, it could move higher or it'll go there. And then that'll be our V value. And then it could go here. That'll be our E value. And then if it goes higher, we have E1, E2, E3, and so forth. All right, but I don't shoot for those levels because you never hardly see those too much before you get out of the market. A lot of people don't have the discipline to stay through the market that long and just following Ichimoku. Now, I didn't have to trade this with Ichimoku. We have another way to get into the market, but it all lined up the same, so we took it with this Ichimoku trade. So that's what we got, traders. We looked at this on our members section when we just took our weekly webinar, because we'll do a weekly webinar and discuss these trades. And then when these trades start to develop, I'll do a another video, which would be like, I don't call it a trade alert video, but really it's a trade alert, trade setup I call it, because the reason I call it a trade setup, so I'll send a trade setup on this and I'll post it in our forum. And then what I do is I just show the levels that we want to get into the trade, or the area, or the signal, or whatever. Because if I don't tell you exact levels, say we get in here at 0.890 and we get out at 0.925, because that's not helping you. I want you to understand the signals and the trigger to get into the trade, so you know where the trigger level is, instead of me saying, well, get in on this level. You don't even know why you're getting in on that level. All right, so you're just taking a trade blindly. So if you learn this stuff and then you hear me saying the levels and where to look for and what to do, then you understand what you're looking at. All right, so that's what we're looking at with this New Zealand dollar CAD. You always look at this also. Let me show you one more thing. So we have 1, 2, and then I showed you my target, right? From 2 to 3. And then I said where our target was previously. But also, when it comes to the targets, you must get past this level. So let me draw this. So this is always like your first target. So you have a 1, a 2, this 3 here, and you're shooting for 4 wherever we said that was. Well, sometime you won't get past 2, so you got to make 2 as a level for you to get past. So you got to get past 2, and when you don't get past 2, you see the market stay in this box sometime, and it'll range, and then it'll go up or down wherever it's going to go. But that's what you're looking at, and that's what we trade. Basic Ichimoku there. That was pretty basic, easy setup. Also using other setups and opportunities, but we don't have to discuss those because this was just a basic easy Ichimoku trade off of a Kijinsen bounce, also a cloud bounce. You had some confluence here with the cloud and Kijinsen. Nice flat Kijinsen, Nice price action, nice entry, and looks like the trade could be a good trade. Again, we got to get past this level. All right, so it looks pretty good. Other than that, I'm going to end this. Hope that helped you guys out. Until next time, traders, have a great one. God bless. So long.